Breaking news, Blackrock CEO Larry Fink drives over $10 trillion into Bitcoin ETFs, signaling a monumental shift towards tokenizing financial assets. Are we witnessing the dawn of the new era in finance? Stay tuned for the evolution and don't forget to subscribe, like, and share, and let's start. So we're starting off with, as generally you don't sell your Bitcoin, but sometimes you should sell a little and place some small limit sell orders from the 100,000 to 1 million, give the market a pass to 1 million like the breadcrumbs. The next up we go for, what's next? Big Sunday report, all you need to know on the technical side and the news as well. Technical analysis, psychological analysis. So Bitcoin is currently moving at a significant yearly all-time high resistance around the $69,000 region. It's crucial to understand the zones and phases through which Bitcoin is moving in its bull cycle to grasp the complete picture. The stages of the bull cycle are as follows. The first stage, marking the end of the bear market, range from 16,000 to 25,000, as the initial phase of the pre-bull market was between 25,000 and 38,500. The second phase of the pre-bull market extended from 38,500 to 48,000, as the onset of the golden bull phase is from 48,000 to 70,000, leading into the super cycle phase, which stretches from 72,500 to an astronomical level over the last 2 years. I have discussed these 4 cycles, alerting and preparing you for what's to come. So where are we now, and what does the chart indicate? First and foremost, recall my prediction when Bitcoin was at 48,500. I mentioned that a breakout above this level would bring us very close and very fast with max speed to the all-time high, happening extremely quickly within a few weeks, and indeed, this breakout marked the beginning of the golden bull phase and brought Bitcoin to 69,000 exactly as predicted weeks before. Currently, any movement between 48,500 and 70,000 falls within the golden bull territory. Anything above the 72,500 signals the start of the super cycle, and a phase characterized by substantial green candle returns and surges. I believe we will continue to move within a golden bull and super cycle very soon before progressing upwards. In other words, we're going to see some sideways movements for the time, and this sideways is most likely between 64,000 golden bull area and 80,000 super cycle area, bullish sideways for a specific reason. This isn't because Bitcoin appears weak or needs correction, rather it surged too quickly, leaving high market cap altcoins struggling to keep pace. So while Bitcoin achieved a new all-time high, coins like Ethereum, BNB, or Solana, along with the altcoin market cap, have yet to set a substantial inflows, as this indicates a robust altcoin market that hasn't been fully activated yet. And the more Bitcoin moves sideways, the greater the chances for altcoins to surge. As 1 month ago, when Ethereum was below $3,000, I told you it's going to 4,000 in a matter of weeks. As you can see, altcoins are currently following up very quickly. As Bitcoin has reached a new all-time high ahead of the most altcoins, we are seeing these cycles repeat, and expect Ethereum, BNB, and other high market cap coins to soon reach the new all-time highs. So for this to happen seamlessly, market makers need a slight bullish and stable Bitcoin price as the declining Bitcoin dominance, which is currently evident in the charts. The next 30-40 days are likely to favor altcoins in terms of ROI and market cap inflows. At the same time, we've seen a slower bullish Bitcoin momentum moving sideways between 64,000-80,000 in a golden bull region. While altcoins are poised to rise, expect a period of bullish sideways movements for Bitcoin on the mid time frame. To fully understand the Bitcoin idea of bullish sideways, have a look at the drawn arrows in the Bitcoin chart top left. Significant inflation data will be released this week, as with a consumer price index data on Tuesday and the product price index data on Thursday. These releases may introduce volatility, so stay alert. This is pure alpha masterclass Bitcoin reporting, something you will rarely find on Twitter. Let's go for more. What do we have here? So, if there's one fiat thing I can urge you to buy in this next Bitcoin cycle, make it great timepiece. If this is your second cycle, get yourself a timepiece, and whatever you like, one you'll keep and remember. There are millions of people who bought real estate, became millionaires, and are now struggling to allocate to Bitcoin. Why? Because they forgot who they are. They became so comfortable in their present that they forgot to remember what spirit got them there. A timepiece, unlike anything else, literally marks the time in your life and will always bring back to memory of who you were during the time period. So if it is your second cycle, buy a timepiece you love, and it'll serve to remind you of who you are when you most forget it. The next up we go for. As we reach all-time high in Bitcoin, many pause from those who were deep in the bear market will age perfectly. We're still early, calculations will continue to make sense, and the risk versus reward for Bitcoin is incredible. Study and save in Bitcoin, act accordingly. The next up we go for. Whale sweep in supply, demand will expand. 1 billion USDT, which is $1 billion minted at Tether Treasury. Next up, Bitcoin is up 51% since Vanguard advised its clients to steer clear of the Bitcoin and didn't offer an ETF. As you come at the king, you best not to miss. Jim Cramer telling investors to buy Bear Stearns weeks before it collapsed exactly 15 years ago. Today, Jim calls Bitcoin a bubble when it's trading at an all-time high above 70,000 on the weekend, and Wall Street is FOMOing in. The next one, we are the 70,000 Bitcoin, and the smart investors like Bill Ackman are just starting to think about it. The vast majority of global capital has zero Bitcoin exposures. Meanwhile, the perception of Bitcoin is changing rapidly. A few years ago, you could be forgiven for thinking it was still a plaything, and you may have seen that frizzy-haired FTX slob all over the magazine covers and steered clear of it all. But a lot has changed since then, and anyone with a serious wealth to protect can no longer ignore it. Now Larry Fink is leading the charge, and he is stuffing Bitcoin into as many Blackrock funds as he can. So why? Because he understands it's a neutral reserve asset that would need, and it's the only asset that cannot be debased in a world full of assets that can be debased. And it's the one asset can counterbalance melting bond portfolios facing the prospects of continued monetary debasement. So how will pension funds meet their obligations with a portfolio full of bonds that won't keep up with the inflation? They will buy Bitcoin. And so will almost every investor on the planet, either actively or passively. This is the new reality. Now it's time and just a game to see who catches on first. Bill Ackman seems to be closing in quickly, and no doubt other billionaires will try to beat him to the punch. One humble suggestion to the billionaires out there: don't delay. New supply issuance gets cut in half next month, and your optimal strategy is to buy as much as you can ASAP, and then announce it to the world to price out your billionaire competitors, leaving them in the dust. Even $1 million Bitcoin is still 10x opportunity in the long run. Buy Bitcoin for a mere $70,000 will cement you as a legend in your family for generations to come. The main topic of today's video, Larry Fink bets Bitcoin ETFs are just the beginning as Wall Street eyes 10 trillion tokenization plan. As the CEO of Blackrock has seen the Wall Street giant spot Bitcoin exchange-traded fund cross $10 billion in flows since its January launch. However, Fink's ultimate goal is tokenization of every financial asset, he said in January. Real-world asset. Wall Street interest in tokenizing financial assets like stocks, bonds, and funds so they can be traded and tracked on the blockchain is scaling up. And no wonder tokenized real-world assets will be worth $10 trillion by 2030 by some estimates. So while retail traders are wiping themselves in a frenzy over the last Bitcoin bull run, traditional financial behemoths are playing the long game, so far realizing that their opportunity has meant facing technological challenges, a lack of market infrastructure, and regulatory uncertainty that may be about to change. For more than a decade, investment banks and other financial institutions have been experimenting with the blockchain technology to see if it can make the capital markets more efficient by cutting out intermediaries, improving record keeping, and accelerating trading speeds. Those involved say they face a host of complex obstacles that have often resulted in discarded projects and failed startups. Among the challenges, blockchain doesn't scale well, and it's too transparent for competitive institutions and client confidentiality, and it presents cybersecurity risks. So that's kind of all the information we got on today's video, and if you're interested in more, today will be more. So don't forget to subscribe, like, and share. See you in the next one, and peace.